Abhishek, good morning and thanks for taking the time out.
Morning.
Overall, we've seen growth in terms of your revenues, but also a contraction in your margins. I'd reckon if you could just tell us about the quarter gone by and what factors do you attribute to, firstly, the top line and secondly, your operating profits?
So firstly, we've hardly got any growth. It's been a flattish growth. I mean, it's just been 1.5%. So as a result, the capacity utilization has been very low. It's at consolidated capacity utilization is at 77%. And therefore the margins, because at the end of the day, at a lower capacity, all costs are already incurred and therefore the margins are lower. However, we've been able to maintain the same margins as the last quarter, considering that the capacity utilization is lower, which means that we have been able to do some good stuff around cost and also some value addition, which we've done. So value-added mix has gone up, and as a result, we've been able to maintain market margins. Going forward, obviously, it's going to be a better H2 than the H1. H1 we had the first quarter, which anyway was kind of a washout, and then the H2 again. The quarter two was hit by incessant rains across India, and the building material industry, especially the ancillaries, do get hit when it's rain. Building materials, buildings come to a standstill. So we are looking at a much better quarter three and a much better quarter four. With that, the margins will also go up because the capacity utilization obviously will become better.
Mr. Somany, good morning, sir, and thank you so much for joining us today. I just wanted to take this point forward. You mentioned because capacity utilization has fallen, so hence the gross margins have also fallen by about a couple of percentage points in this particular quarter. I wanted to just understand what has been the competitive intensity in Q2. There has been some reports claiming that the unorganized players have tried to take some share of the other players, the listed players as well. Just talk us through that, and you are expecting a better performance in H2. Talk us through some of the factors that will determine that, and anything on exports as well, if you can comment as well.
So all the capacity which was added in the last 12 to 24 months in the Morbi region, which is where the cluster is of ceramic tile industry, a large part of that was, in fact, most of it was for the export market. And export, as you all know, has been very muted because of the high freight rates owing to the geopolitical situation and the two wars happening. As a result, that particular material was trying to be dumped into India. I must say there's not been any substantial amount of dumping which has happened in terms of volume. So they haven't been able to take market share from us as far as volume is concerned. In fact, they're probably negative. But there have been disruptions in terms of pricing. So there's been pressure on pricing, and therefore we also had a pressure on pricing of about 0.5% to 1%, where we did extra discounting in the 2 quarters. But they haven't been able to take any market share because demand per se has been slow. It's not like the building industry will pick up an unorganized tile in the midst of rain. So the same issues persist as far as they are concerned as in terms of volume. So in terms of volume, not much change. In fact, the organized players have done better than the unorganized players in the domestic market as far as volume is concerned. But margins come into play because pricing comes under a little bit of pressure.
Now you did mention about the current outlook. So you have cut your guidance as well in the second for this particular year, about 5 to 6% from low double digit earlier. But you are anticipating EBITDA margin improvement. So will it be safe to assume that going forward, what will be the strategy in terms, because you've taken market share or maintained market share while letting go of some margins, but you are anticipating H2 to have better demand as well and better margins as well. Talk us through what could be the strategy going into H2 and with do you see lesser competition from the unorganized players as well in H2?
So we don't export too much, but I believe that the freight rates have come off a little bit, which means that by December, materials should start moving into Europe and to the US and all the first world countries from India, other than the other countries which we're anyway supplying to, Middle East, Far East, etc. So that little more offtake will happen on the export side. Otherwise, as far as India is concerned, it's a clear 5 months going forward. So capacity utilization obviously will be much better. And we're looking at a double-digit growth or a high single-digit growth in the H2, and considering we're at about a percent growth, therefore we have cut the guidance to about 5-6%, which is a very practical and doable target. And with that, margins would improve considerably from where we are today. So at least a percent to maybe 2%, depending on how much we are able to do the value addition mix better, and also how we are able to utilize capacity better. But
Abhishek,
having said that, the balance sheet is absolutely under control and under check. So we've done fairly well when it comes to balance sheet.
right. And Abhishek, fair to assume that own manufacturing and tiles JVs will be essentially segments which will drive growth in the second half?
Yes, correct. So in the first half, the own manufacturing came off a little bit and trading went up, but that would reverse. The minute I say capacity utilization going up, that means it would be for our own manufacturing and our own JVs, where we have between 50 and 80% in most of them.
Not just one question on the Max plant. Now, we've seen about 36% utilization in H1.
Yeah.
Is the confidence of gaining margins of about 100 to 150 basis points in H2 coming from higher utilization of the Max plant? Because it's you know, a bit lower than your 50% target of utilization. Is that a safe assumption to make, Mr. Somany?
No, first of all, our utilizations overall on a console level, we've always been at 80, 82 plus. It's been the first
No,
time
so
at 70.
specifically for the
So
Max
Max
plant, Mr. Somany. Sorry to interrupt. Just for the Max plant specifically.
No, I'm coming to that. So you said my it's 50%. We've never had a 50% capacity utilization level. But as far as Max is concerned, we want to scale it up slowly. It is a material which is of high value added, and obviously in a muted market, dealers tend to buy the more moving material, the more cheaper material. So Max, we are hoping that the capacity utilization will be anywhere between 45 and 50% in Q3, and then going forward, it would only keep moving up. But that is only one small portion of the entire margin game. It's not that Max only moves the needle, if that's what you're asking.
Now, just one question I wanted to ask on the market specifically, because have you seen that South has been a little weaker than estimates? Just wanted to get your understanding on the same. Are you seeing some pressure in Q2 specifically? Have you seen some pressure in the South market? And because Morbi directly supplies to the South, so just wanted to understand a bit on what is your outlook. How has Q3 been, and anything on H2 that you can see in that particular market right now?
You're right. Morbi does pump in a lot more material in the south, but it's not that south has been weaker than any other market. It's kind of pretty much similar across India. So there is not any particular market which has done worse or better. I haven't seen specifically any huge disruptions between the south and the north. Obviously, we are a more larger brand in the north. But having said that, even North has been extremely weak.
I'm assuming that capacity utilization will improve in the second half. Even taking that into consideration, I'm assuming that you guys don't have any very large capex plans on the anvil. And under those circumstances, can we also assume that we won't have any big changes in the balance sheet going forward?
Yeah, absolutely correct. The three angles of the balance sheet, the receivables and the stock, both of them are under check. And very correct, and capacity utilization and more than enough capacity going forward. So there is no expansion plan for the foreseeable future as of now.
Just another question, as you mentioned briefly in this interview as well, that, you've been able to keep and maintain your balance sheet very well. Your net working capital days are also at 13 days. Would it be safe to assume that going into H2 as well, that is the kind of level that you will be able to maintain?
Yeah, absolutely. More or less there. We don't want to compromise on the balance sheet for sure.
Well, Mr. Somany, thank you so much for joining us today here on NDTV Profit. We look forward to our next conversation and wish you the best for Q3. And season greetings to you and everybody at Somany Ceramics.
As likewise, season's greetings to everyone. Thank you.